From thetraderguy.com, this is Chris taking a look at the New Zealand dollar for the upcoming week of January 22nd. I am on the weekly time frames. I'm just using this as a top-down approach, and sometimes when you trade currencies, what you need to look for, you need to look at a currency against several other currencies. So I'm going to take a look at the New Zealand dollar in 3 different markets and see if I can discern what we may be looking at. Now, in front of you, this is Kiwi dollar against the US dollar, and we have rallied a bit during the week, as you can see, slamming into right in the middle of this cluster here at 6,800 and then pulling back. When you go down to the daily chart, it does, it looks relatively bullish, but we are running into some trouble. Now, keep in mind that the US dollar is on its back foot currently, so this is somewhat of a slightly bearish tone, but I wouldn't get overboard with it. Now, you can find out a little bit more about the currency, like I said, by looking at other currencies against it. And here we have the New Zealand dollar, Canadian dollar. We have formed a perfect shooting star right at the 200-day EMA, just below the crucial 89 handle. So this sets up one of two things. Either we will break down below the bottom of the daily candlestick and go looking for lower pricing, possibly as low as 0.8650, although there should be some support here. But it definitely looks vulnerable, at least in the short term. Above, if we were to clear 89, we would not only get above this round figure of 0.89, but we would also clear the 200-day EMA, and that would obviously be very bullish. Looking at the weekly chart, it does look somewhat bullish, but you can see that there is a lot of resistance above, so a short-term pullback could make sense. And then finally, I'm looking at it against the yen. Now their shooting star has not broken above it. Tried to make a fresh high here, but pulled back. So this suggests, again, there's probably a little bit of a pullback coming. But again, like the Kiwi Canadian dollar, if we were to break above the top of the candlestick, that'd be a very bullish sign. So the trade would set up as above 73. You probably go looking to fill this gap up here at 73.50 minimum, right? And you probably, at that point, you probably would be looking at going higher. However, if we do break down here, probably going to be looking for 72.25. So really, you can think of this as a binary candlestick. Just follow which way it breaks. Not necessarily with 1 pip breaks, but if we're above or below on like a 15-minute or 30-minute close, looks like a nice short-term setup in either direction. So this is just an example of what looking at a handful of currencies against whatever currency you're trying to analyze can help. And in this case, it looks like the Kiwi is vulnerable, but keep in mind that anytime you get a candlestick like this, or like on the New Zealand CAD where you have a shooting star or a hammer, works in both directions actually, when we do break the other side of it, so in this case we break above the shooting star or below the hammer, you have to think that there was a lot of conviction, for example in this candlestick, that we rallied during that day and then pushed it back down. Well, what happens if we continue to go higher? That shows a lot of resiliency by the buying side, and it also has all of these people trapped, meaning they have to buy to get out of the trade. That's why I like these candlesticks so much. But a lot of people will teach you to trade, short the shooting star only, buy the hammer only, but that's not necessarily going to be the best way to play it, because what you want to be is on the other side of trap traders. So I think there are some trades coming up for the New Zealand dollar, probably Monday and Tuesday of this coming week.